And this month, October, Northeast Market Stats, we're going to discuss what's going on with the market and how it continues to correct itself from the historical market that we were just in earlier in 2022 and all of 2021. So stay tuned because you don't want to miss it. Hi, I'm Antonio Newton, your local realtor with the Newton Group at Coldwell Banker, and this is October 2022 Market Stats Edition. This is only for Northeast Columbia, so it's zip codes 29223, 29229, 29016, and of course the Richland County portion of Elgin, which is 29045. So when we look at the numbers, we are in a correcting market. So the market was going like this, right? And so now it's correcting itself. So we're going to see some numbers come down, which is understandable. If you've been watching, we knew things couldn't continue. But we're not seeing what the news media may be portraying. Even though interest rates are increasing, we still aren't seeing what the media may be portraying. So here is the local data for Northeast Columbia. So we are down 28% in terms of total closed transactions to what we did last year. So last year we did 223, and we did 311, and this past month for October we did 223. But when you look at sales price is still up 7% from where it was last year. Last year it was 278,586. Right now, we are at 298,252. That's the average price point of sold homes, is almost $300,000. I remember at one point in time, the average price in our MLS was like 185, 190. And now here we are almost 33% more than that. So when you look at what we have in terms of active inventory, we're up 8%. So last year we had 694 available, and right now we have 752. Now, if you've been following me for some time, you know one of the two main factors I like to bring out is the days on the market, because that tells us how fast inventory is moving, which helps represent the demand that the buyers have, and then also the sales price, the list price. That once again one tells the urgency, one tells the importance that buyers are placing on properties if they're willing to pay more at list price or less than list price, and how quickly they're moving on properties. So right now, our days on the market average is 29, which is a month. That is still extremely fast. You got to remember, 6 months, and we're going to look at some data points later, but 6 months of inventory is a balanced market. So right now, even though things are correcting itself, we're still in the seller's market at a lot of price points in a lot of areas. So the average list price to sales price is 99.45%. So pretty much things are still going just below list price, and they're being gone in 30 days. When you compare that to what we did last month, so last month it was 27 days, now we're at 29. So things are moving 2 days slower. And then last month it was at 99.58. Now we're at 99.45. So yes, we're seeing it correct itself, but we're not seeing the nosedive that some people are saying. Some television shows, or not shows, but some television broadcasts and some experts are saying that the market's going to crash. We're going to run into this recession. Now that may still be true down the road, but as of right now, that's not what the data is indicating. And compared to last year, so October of 2021, things were selling in 14 days. Now, do we really think realistically it's possible for things to continue to sell in 14 days and above list price? There's no way that model could have continued. So what we're seeing right now, once again, is just the market correcting itself. So when we look at the inventory versus sales, we can see that what was sold was outpacing the beginning of the year, the active listings that we had, the inventory. But we see once interest rates started to climb up in midsummer, we started seeing how that really changed the inventory versus the sold properties. And now we can see how drastically, which is how inventory is catching up, which is why we're starting to see days on the market a little bit longer. We're starting to see prices go down a little bit. Sellers aren't getting exactly their full list price now because there's more inventory, so buyers have more to choose from. Now that's similar to this chart, which is new listings versus sale. So how many new listings are coming on the market versus what's being sold. So once again, we saw where the sales were keeping up with it, but come June, when the interest rate spiked, that's when we see inventory really took off and new listings came on a lot. And now we're not seeing as many new listings come on. But if you looked at last month, we're also not seeing as many sales. So things have really slowed down. So if we have more listings coming on than we have sales, that's going to help increase the inventory gap. So if we have less listings coming on than sales, then regardless of the numbers, we're losing inventory. But right now we're in the process of gaining inventory. And you can look at that when you look at the absorption rate. We have 3 months worth of inventory right now. For the majority of the year, we've been at 2 months. So right now we have 3 months worth of inventory, which is a seller's market, but not quite as aggressive as it has been. And then, of course, we see from active days on the market how the average days on the market for what is active has increased, is slowly increasing versus what's closed, even though that is still below 40 days on the market. I mean, we're still under 30 days average for closed on the market. But you look at what's active on the market, that number is increasing, which means that the inventory is increasing, which is why it's taking longer for things to go under contract and ultimately get sold. And now this month, when you look at our chart for price point, you can see for each price point how the closed and the pending is not keeping up with what's active. So we see that that inventory is gaining. The biggest one I want to look at, though, is that 100 to 200, 200 to 300 price point. So you see that 100 to 200, there's only 23 active properties right now. 23 versus 48 pending and 31 closed. That is probably the biggest discrepancy in the marketplace that we have right now, is that 100 to 200 price point. That is still pretty aggressive for a seller's market when you look at what's closed versus what's pending. But when you look at 200 to 300, that 184 active versus that 209 pending and 91 closed, we see how much of a balance that is. And then, of course, as we get to 300, 400, we see a similarity. But look at 400 to 500. There's 47 pending, 22 closed with 54 active. And then, of course, once you get over 500,000, you got 9 closed with 39 pending and 46 active. So we see inventory levels are balancing out. This is, once again, the market is correcting itself. So now we're heading towards a more balanced market for buyers. So if you're a buyer looking in this market, now may be the time. Maybe for the past year, maybe you decided to rent again because you couldn't find a house to purchase, because you couldn't compete. Now may be the time. I tell people now is just as good a time as ever if you're in a position to buy, because reports say interest rates will continue to go up. So right now they're between 7, 7.5. You know, what if we hit 8? What if he went 9? And I also want to say 7.5, you know, we're coming out of historical market. So we can't expect to see 2.5, 3% interest rates again, ever. If so, something drastic's happening. So that's not the norm. But what, you know, we probably will, from what I'm reading, the experts that I read and follow on everything, we probably will get to, you know, 4.5%, 5% probably by 2024. But next year is really going to be up in the air, depending on, you know, the Fed say, depending on how, as they continue to raise rates, how inflation is affected. You know, they're really trying to slow that down. So 2023 is still in question on what the rate's going to be, how high they will go up, when they will start to come down. Nobody knows. But I do know this. If you're paying rent, you're wasting and throwing away money. I know that. If you're thinking about selling, as mentioned, now still may be a seller's market. We know what home prices are right now, but once they continue to dip, how far will they dip? We don't know. We see that things are staying on a little bit longer. Sellers aren't getting quite the full price. So next month, well, if that continues to go down some and you're in a position where you got to sell, we don't know where this trajectory is going to end up at, but we do know that we are in a correcting market, declining market, however you want to call it. So if you have a need to buy or sell, now is just as good a time as ever. And if you want to talk about that more, give me a call, 803-608-2597. And I would love to be able to talk with you about your specific needs and what you need and how we can help. So thank you so much for watching 2022 Northeast Columbia Market Stats. And until next time, stay safe.